Hey everyone, welcome back to Corporate Decoder, the place where we uncover the gritty truth behind corporate filings. So buckle up because today we are dissecting a report that shows a company quite busy converting one type of stock to another. Get ready for some exciting stock movements and unregistered sales. Before we dive into the juicy details, if you love getting these kinds of straightforward, no fluff breakdowns of what these corporate documents actually mean, make sure you are subscribed to the channel. Also, we have a fantastic community over on Discord, linked in the description below, where we discuss all things finance and investing. So, what we are looking at today is a Form 8K, which is basically a report for really important events that a company needs to tell the public about right away. This particular one is from Hyperscale Data Inc., and it focuses on some pretty interesting stock activity. The earliest event they are reporting happened on the 29th of September 2025. This is essentially a snapshot of what has been going on with their stock. Now, let's get to the heart of the matter. The company has been quite active converting its preferred stock into common stock. We see here they issued shares of Class A common stock. This is the regular stock that most people think of when they talk about owning a piece of a company. Between mid to late September of 2025, Hyperscale Data Inc. issued a whopping 9,512,105 shares of its Class A common stock. Now, where did these shares come from? They were issued upon the conversion of about 3,804.84 shares of Series B convertible preferred stock. Think of convertible preferred stock as a special type of stock that can be changed into common stock later on. And it wasn't here just the Series B preferred stock. On the 22nd of September, they also converted some Class B common stock into Class A common stock, adding another share to the mix. These shares were sold without needing to be registered with the SEC, which they did by relying on an exemption under the Securities Act of 1933. This usually means they are being offered to sophisticated investors under specific conditions. By the end of September, right before this report was filed, the company had a grand total of over 109 million shares of Class A common stock outstanding. That is a lot of shares, and seeing them increase so significantly through conversions can tell us a few things. It suggests that the preferred shareholders found it beneficial to convert their holdings, likely because they believe the common stock will perform well, or perhaps they needed the liquidity. Looking at their listed securities on the stock exchange, the Class A common stock is traded under the ticker symbol GPUs. On the Nice American, this is the main vehicle for the public to buy and sell ownership in Hyperscale Data Inc. They also have another class of stock listed, the Beifindliche Series D Cumulative Redeemable Perpetual Preferred Stock, also trading on the Nice American under the ticker GPUSP. D preferred stock often comes with a fixed dividend, usually higher than common stock dividends, and it has a fixed redemption value. The fact that they have a preferred stock paying a substantial Beifindliche dividend is notable, especially when considering how that might affect their overall financial strategy and cash flow needs. Now, let's put on our Warren Buffett hat and look at what this all means. When a company converts preferred stock to common stock, it generally increases the number of outstanding common shares. This can dilute existing shareholders' ownership percentage, meaning each share represents a smaller piece of the company. However, it also means the company has likely extinguished future dividend obligations on that preferred stock, which can free up cash flow. The large number of shares issued suggests a significant conversion event. The fact that these are unregistered sales, relying on Section C over the Securities Act, means these sales are likely occurring to a limited number of investors who are deemed to be sophisticated enough to understand the risks without the full protections of a registered offering. This is common for private placements or conversions involving existing debt or convertible instruments. What is really important to consider here is the underlying reason for the conversion. Are the Series B preferred stockholders converting because they see immediate upside in the common stock? Or is it a strategic move related to the company's overall capital structure? Without more context on the terms of the Series B preferred stock, it is hard to say definitively, but a large conversion is usually a sign of confidence or necessity. Looking at the overall picture, Hyperscale Data Inc. is actively managing its capital structure. The increase in common stock could signal an expectation of future growth and a need for a more liquid equity structure. However, existing common stockholders should monitor how this dilution impacts their ownership stake and earnings per share. In conclusion, Hyperscale Data Inc. has had a busy period of converting its preferred stock into common stock. This move has significantly increased its outstanding Class A common stock. While this can be a positive sign of converting debt like obligations to equity and potentially reducing future interest or dividend payments, it also means a dilution for existing common shareholders. It shows the company is making strategic moves with its equity, but it is crucial for investors to understand the implications of this increased share count on their investment. Alright, that is our rapid Xanfire breakdown of Hyperscale data, Inc.'s latest filing. What are your thoughts on these stock conversions and what they signal for the company's future? Let me know in the comments below. If you found this analysis valuable and want more deep dives like this, please hit that like button and consider subscribing. And don't forget to join our growing community on Discord. The link is in the description. Thanks for watching, and we'll see you in the next one.